traders, dollar keeps on falling. Now, the biggest question is, will the CPI make things worse for the dollar? Let's find out when we dive into these currency pairs. Remember, the non-farm payroll was worse than expected, but the labor market came in strong with unemployment easing and initial jobless claims easing. And even yesterday, we had a positive initial jobless claim. So with that being said, let's just analyze what this means for us on this week. So traders, after getting this entry here on the euro and the dollar to the upside, what I still expect to see is to break above here, maybe later today or as the week begins. But CPI is going to make everything else more thrilling for us. I would like to see CPI doing worse than expected, as the forecast already shows that it is not it is mixed. It is expected to fail at some place, at some state it is expected to, do slightly better than expected. So with that being said, this creates a problem. If you missed this, then wait for us to define what the CPI has in store for us. So with that being said, beautiful traders, let's get to why we are still holding from here. This is the non-farm payroll spike to the upside. This is the deep test. It did a 1 2 3 4 5 correction and then a wave to the upside. We are still holding. We are already at break even and we are above the support line. Even if it comes from next week, this also becomes a great place to look for buying opportunities to the upside. Now, with that being said, traders, let's change our chart and see what we have in store. Right now, it's the pound, and pound is one of the best performers this week. With that being said, we are still at the mercy of this negative printing that made the dollar suffer, and after that we are able to get from 1 2 and 3 times bouncing from this liquidity side. In here with the pound and the dollar, we are already above the NFP's high because the NFP's high is somewhere here. This simply means that we have been in some kind of resistance support and we have broken above it. And as you can see, after the break above, a retest came in. After the retest, we made another new high, and we might potentially make another new high and keep on making higher highs and higher lows. This is expected to be seen on the pound and the dollar because the pound is more stronger than the dollar as we speak, with the non-farm payrolls putting the dollar under pressure. So traders, with that being said, let's go over to see what gold has in store for us. Remember, it is just $30 for you to join the VIP, and you could have been sitting comfortably with like this, real trades, real signals at the exact same time that you need. You don't get late signals, you don't get why these signals. Some signal providers, I'm sorry to digress, but some signal providers give you trading signals and don't even give you the reason why or the reason behind why you should be selling or even buying for that matter on their signals. You just have to follow blindly. Here, everything else is backed up by the data. So with that being said, traders, we still have what we see here as the non-farm payroll. It was extremely low. It did worse than expected. It was supposed to be a strong spike to the upside. What caused this reluctance to fully go 100% bullish mode was that the NFP was bearish, but unemployment rate decreased, which means it gave the dollar some strength. That's why we had a spike to the upside and a stronger pullback, but the overall direction was still the weakness of the dollar, and this is what we are capitalizing with. And ever since yesterday, we were still inside this signal, of course, and after that we have already breaking even. After this signal, we want to see the gold go to the upside. We don't want to see selling opportunities in gold. Every selling opportunity or buying opportunity like the ones that we are currently in are influenced and backed up by data. They are not random signals. Everything else is well thought of. Everything else is mostly backed up by the fundamentals. And last but not least, my favorite pair, which is US dollar and Canadian dollar. This one was a fantastic setup. Of course, from here, this one is still a fantastic setup. From here, took a sell, keeps on making lower lows, lower highs. This is to follow. This is going to be what happens next. We are going to see the dollar going further and further to the downside. You can see today we have the Canadian dollar unemployment rate and unemployment change. So if anything becomes bullish for the dollar, this puts more pressure onto the US dollar even worse. So the CPI might find this is not support, this was resistance from the previous price. I can just zoom out a little bit so that traders can get to see what I am talking about. This was after this buy, this was after reaching this resistance. Price just never stopped, but we wouldn't say this was a break, as it formed a little bit of a resistance around here. Every time it touched here, even after the NFP, the price went up to touch this resistance and kept on going to the downside. Now if we could just put it like this, then it can be a bit clearer to you guys. Now this means that every time we reached this was the resistance, and if we do have stronger employment data coming out of the CAD today, this simply means that we might even push further and await the CPI around here. And with the CPI becoming a bit worse than expected, making things worse for the dollar, we might even be going down to the support level deeper on the price. Let me just show you the price on this price here, which is 1.3923. This is the price, and this is where I would be targeting if the CPI comes out worse and the PPI comes out worse. This is the target place. This is where I am targeting, as you can see. But with that being said, this is the US dollar and the Canadian dollar. We stay put, we stay calm, we follow the data. We only, and I do mean only, will think of reversals if the data suggests so. If the data doesn't suggest so, why would we be out there trying to flash money out? We are always trying to make more than we should. And to get all these kinds of signals that are fundamentally backed, then it simply means that you have to join the Vinboss Signal Factory with simply $30 monthly subscription. You will have to be registered by me, of course, and then the procedure is very simple. After registering, fund your account and then follow the procedure. Our risk management rules, we already have risk management rules for traders out there seeking more knowledge or who are trading with us that we follow. So with that being said, beautiful traders, thanks for watching the video. Remember to like, to subscribe, and to make sure that you join the Telegram channel. The link to the Telegram channel will be left under the video description. From me today, happy trading. I will see you again tomorrow.